Hey guys, what's up? Max Convexity here. You guys ready for an afternoon report? Sorry it's a little bit late. All right. Let's see what the market's doing. I haven't even checked what the market's doing. Come on. Anyway, I got a freaking. Sorry about that. It's up though. It's up 1%. But not on the highs though. Off the highs. So, all right. Gosh darn it! I should have had this set up. I was just trying to get on here before 3. It's 2:51. In case anyone wants to see an earnings trade, if there's an earnings trade, tell me about it in the comments right now. Tell me to do. Gosh darn it. Got up here and then just shied away, and it's going towards this 574, but came back and checked the trend line. Bitcoin to dollar. Let's see if it's still over 100. Heck yes, 101,000. All right. Well, thank you for being here, both of you guys. I appreciate it. All right. So let's go check out the model portfolio. Hopefully any earnings trades that you guys that you wanted me to do, you've already seen me do, and you've already put them on. All right. So, let's see here. Where is this? All right, here we have it. Model portfolio. I'm up 57 basis points. SPY's up about twice as much. Bonds are down today. I am beating the 60-40, which is good. YQQ's costing me 23 cents, but GPTY is making me 41% or basis points. LFTY is making me 27 cents. ULTY is making me 26 cents. You gotta love it. Beautiful day. Even freaking Misty. Even little old Misty's kicking in 5 cents. Heck yeah. Heck yeah, Misty. You gotta love it. All right. So now let's go over here to the GPTY verse. The GPTY verse. Where would I be if I were the GPTY verse? The GPTY verse right here. Well, what do we have here? We have good job. Good job, LFGY. 4.5 basis points. Good job, GPTY. Almost 3%. YMAX doing well. SFAL doing really well. As is YSPY. Maybe we should drill down on YSPY a little bit today. It's been around for a little while. Maybe this would be a good time to weave over into the YSPY lane. Maybe let's get a little YSPY out. It's only been around a couple of weeks, but we'll compare it with something. But let's just look at what it's done and how much money it's got under management right now. See if it's raising funds. So let's go to the fundraising first, right here. So it did have 730,000 forever, and they lost some money. Somebody sold $100,000 worth, but then people have been buying it, and now they're at 1.8. All right, I'd like to see that get bigger. I mean, I guess we will. I guess we have to wait and see what kind of dividend it's going to pay. So look at this. I guess there's the answer to our question. It paid $1 and it paid 81 cents. So it kind of looks like Defiance. What's the next one going to be? 61 cents? I'm just joking. All right. $1.81. How much does the darn thing cost? Is it 20 or 40? It's 20. $1.81 in 2 months. So you multiply that by 6. So 2 times 6 is 12. So call it 11 and a half. Call it 11. All right. So 11 on something that costs 20 is 55%. Okay. So that is in line with, and that's what we should compare it to. We're going to compare it with triple QY. And I'm going to get back on the rest of the report. I'm just weaving over here into this lane for a little while. So we'll compare it to triple QY. I'm also just trying to kill time until earnings comes out. You guys don't have any earnings trades you want me to see because I didn't see any comments. So let's just shoot the breeze for a little bit. All right. Well, wow, that's impressive. I mean, not much is safer than I couldn't imagine something safer than triple QI on the downside. But I covered call fund safer on the downside. But over this very small sample size, but it was still one of the worst markets in history. But it only started on April 3rd. But by April 7th, it was bad. I mean, it's like 1 day worth of bad. Anyway, so it's hard to tell. But I mean, it's from a small sample size. It's impressive that YSPI did not. Or it's impressive that YSPI was not down as much, did not pull back as much as triple QI, because triple QI is usually the champion at these types of things. You can usually put triple QI against most things in a down market, and it does better. So let's talk about why that is, what creates that. And so what creates that is a big buffer. What creates a big buffer is a large dividend. And what creates a large dividend is, for triple QI, they sell these options daily. For YSPI, they're doing daily options, or not. Well, wait. YSPI's not doing daily options, are they? Because I'm trying to think about this. YSPI is selling a put on an SPX index. I think it's SPXL, right? That's SPX long. It's triple leverage long or double leverage, something like that. Okay. There's not dailies on XPSL, so they don't. So anyway, I guess they're selling weekly options. I guess maybe we could go look at that. I don't know. I don't know if you guys are that interested in it. Anyway, it looks good. If you just want to compare it, I mean, to be fair though, triple QI over the same time period paid a higher dividend, but let's go see if triple QI got an extra, maybe got a third payment in. It may not be a fair comparison if 3 pay periods hit during this short time period. And so this goes from April 4th. So I'm just going to look from April 4th. Or no, this thing actually went public in March 1st. Okay. So we'll look at Defiance from March 1st to now. Okay. Oh, they pay weekly. Yeah, of course. Stupid as it. Gosh, why did they do that? What a freaking nightmare. Anyway, it means I can't just add it up real quick and see. I can't tell you what I was trying to tell you real quick. All right. Well, it's whatever. It's fine. All right. I'm weaving back into my lane now. I am interested. I'm glad to see YSPI doing real well. I really am. Let's look at the yield max buffer report. Maybe see if we have any action going on in yield max land. Anyone beating the parents? Yep. OARC in IWMY, which I believe is this one. Or no, that's ULTY. Okay, ULTY beating the parent. So is YMAX. I'm just using the parent as being NASDAQ. And then so is NVDY. Great job. And even the ones that aren't beating the parents are getting a ton of upside. AMDY is also beating AMD. And it looks like Amazon has got the same amount of upside as the parent to the penny. Both of them 218 basis points. All right, well, let's look over here. There we have Alti. Everything's up except HIMS. HIMS is a little soft. HIMS price performance is a little bit soft today. All right. Look at this one, LFGY doing really well. It's up 4.5%. We're the average stock's up 6.5%, to be fair. But what is going on with this one? Okay, I'm weaving again. Let's weave back over into this lane. BitDeer. It's a holding company, so they just own a bunch of leveraged Bitcoin. Is this basically like MicroStrategies or something? Probably so. It acts like it is. Anyway. Oh, weaving back over here to YSPI and triple QI. I was just going to look here. Now, there's nothing else I wanted to. Oh, I know what I wanted to show you guys. Yeah, I know exactly what I want to show you guys. I guess that is as far back as it goes. Huh. Well, did I not just see the Y-SPY here? Y-SPY, Granite shares. Did I not see here? They've been trading since March. Anyway, that dividend calculator thing's messed up because it didn't go back all the way. It's whatever. Like I say, it's not a big deal. We're just trying to kill time. I need to get my freaking TV on. I'm watching YouTube. I need to switch it back over, and I'm going to do that while I'm talking. Exit YouTube. Well, hey, Grateful Trader, what are you doing? I have time to look at some of those if you want. Do I like OARC? I just don't know that much about it. You know how I feel about single stocks. I do like that that's an index. It's basically more like an ETF. So, I like it, but I don't know much about it. There's just so many other choices out there. I mean, the ones I really like are GPTY, ULTY. And I like other ones too. They don't all have to be there. Curve has some excellent funds. If I didn't have YieldMax, I would get some Curve funds. There's tons of good funds out there. But GPTY, if I had to pick a favorite, I just like that one. GPTY and ULTY. All right. So what else can we look at today? It's 3:02. Okay. So hang on a second. You guys just talk amongst yourself. Who's here? There's 10 of you here. Somebody just walked in. Hello. All right. Well, let me get freaking FUBU on and we can start seeing what happened. I'm going to bring up the option trades. Just I want to see how the trades we were looking at ended the day. TV's coming on. So it usually takes about 5 minutes for the earnings to start getting here. Did anyone do this one? Seriously, it goes out till next Friday, costs you $155. And what it'll do for you is if we should pull back and if we lose about half of this last up move over the next week, and I don't know that we're going to, but if we were to, we moved up from off the bottom to here, just visually, if we lose half of it, I just eyeballed it. It's about 530. Plus there's a big gap there that I think we might be trying to repair. So what I did is I aimed it for maximum, right at, and actually it didn't work out quite at 530. I didn't want to put it out that far. So I aimed it more like at 540. But in any event, if it gets close, it should be good. Even if it doesn't even if it gets there fast, even if it gets there like on Tuesday, even if it gets to 550 on Tuesday, it could help you out. Now, if we keep going up or if we just kind of stay where we're at, this is going to be a loser. That's why it's only $155 per contract. This might be able to help somebody out. I'm going to put it in Discord in case anyone didn't get it. They can put it on in the morning or just go study it. Study it. It's a great trade. It has great potential. And then let's look at this. Let's do it another way. Let's switch them. This put right here's that's out of the money. We could do it with calls, but then we'd have to sell it in the money. Oh, we aren't going to do it with calls. That's the way to do it right there. Spend the $155. You can do it with calls and get a credit, but then you have to, it's just a pain. It's all good. It's all good. So that's the trade right there. So what else? That's the trade for next week. There's no way we don't pull back. And we don't have to go all the way to 530. You saw in that thing, even if we pull back to 550, which may be more realistic. And I didn't even talk about, but I'm always going to just remind people, if we pull back, no, it's not as light. If we pull back, but at the same time, vol increases, we can also make extra. So, all right. So on the ones we're talking about today, so what do we have coming up today? Closing bell overtime on. We have DraftKings should be on. Carvana should be on. App was yesterday. That was a big hit. See, it's down to 337. The morning report, it was $700 up. By noon, it was 5 something or 499 or something. Now it's up 337. By tomorrow, it's going to be up 199, which is just the amount of the original debit, which is fine too. I mean, the original credit, which is fine too. You're just trying to that's all you're trying to do is take your right to dinner. You'll make 10% every week. I mean, it's 10% winner. Rocket Labs might be a good one to look at. And TMDX has earnings day, and so does Coinbase. Okay, so we have plenty of ones that, so Expedia is out. Expedia beat earnings and is down a little bit. Okay, great, Expedia. Now let's look and see if any of these other ones are out. Okie dokie. Okay, so we'll just go through them on here. Coinbase, let's see if it's here yet. And I'm gonna, since it's gonna take forever, this for whatever reason, this app's slow. Howard Lutnick is coming on first on maybe tomorrow morning, I think. Or maybe now it has his picture in the corner coming up. Maybe he's gonna be on here in a second. All right, well. I don't think he's very interesting. I'm not a huge Lutnick fan. He just doesn't come across, doesn't give me the same confidence that a Scott Bessent does. It seems like a little bit of an ideologue, which is fine if you're I'm not an ideologue in the same camp with those guys. Really, I'm not. I mean, so I don't want to identify with them that much. I do identify with more moderate people, business people like Bessent. All right. So Coinbase is, when is this? It's up 5%. I mean, but I can't tell if the earnings have happened yet. Oh no, at 4:30. Okay. You think DraftKings is out yet or Rocket Lab? Let's check Rocket Lab. I guess DraftKings has already happened. So I guess we hit that one. Now Rocket Lab, 5 o'clock. So that means 4 o'clock my time. So not yet. SoundHound. Let's see if SoundHound's out yet. I didn't do one on SoundHound. It's because it's too cheap. But they need at least to be about 20 for the 3-leg to really work right. When this gets under 15 or 10, you almost might as well just sell a naked put. Oh no, DraftKings is today. My fault. Let's maybe DraftKings is one we can check out. Is it 8:30 tomorrow morning? I guess. Now this has been a bust. What about TMDX, Transmedics Group? 4:30. But now their stock's their stock's already reacting. So I don't know if a rumor hit right at the end of the day or something. Let's investigate that just a little bit more. People trying to get ahead of the earnings. Maybe it's supposed to be good, or maybe somebody. I don't see that last little blow up. That must have happened after the market closed. So anyway, I think it's blowing up in after hours. Yeah, there it is. After hours, it's extremely criminy. It's up 6.6%. Well, okay. I mean, we'll take it. We'll take it. All right. Well, that's a little TMDX action. What happened? Well, let's look at Mara. I forget. I didn't like the way it looked. I told everyone not to do it. But then I called my friend, but he wasn't home. The only reason I would have done the Mara trade is maybe just selling the put by itself. The put and doing the put spread didn't make it. The math didn't work. So I did kind of do one. Let's just see. I mean, we won't know till the morning what really happened with it. But I just said, if you have to do a Mara, just because it's so cheap, just But you would have to want to own the stock here. But in any instance, it looks like you could have done the trade I suggested for $48 credit. And it looks like you're going to just probably make the $48 or maybe a little, I don't know. You're going to have to sweat this one out till tomorrow, unfortunately. So that one has not been a great success. We'd rather If it was up a little bit, then we might have to sweat it out. Or if it was up a little bit, we could probably sell it first thing in the morning. But if it opens right here where it closed, right on the line, we're probably, we'll just see. We'll check it out in the morning. So the jury's still out on that one. The jury's still out on Mara. Weekend hits Carvana. Let's look at Carvana. Now this one, this one was like this. Let's see what happened to Carvana, if anything. Carvana. Was Carvana another day, a previous day? Was Carvana yesterday or this morning or something? Shopify didn't have anything of that. I wish I'd had something on Disney, but that was a good earnings report. ARM, App, Melly, Carvana. So Carvana's already happened. I guess we hit that. Hopefully we hit that one. I think some people did that one, or people were asking me for that one. I hope we hit it. Let's take a look at it. I mean, if you did that, that's just a quick $42 on, it's a quick 25% profit. I thought I did a regular Carvana bullish one in here too. Oh yeah, DraftKings. We're weaving back to DraftKings. Okay, unfortunately, so this one was a winner. If anyone did it, it looks like it's fine. Unfortunately, it's just $50 reward on $350. So it's just about whatever 1/7 is, 15%, 14%. I don't know, something like that, but not bad for a week. And hopefully you did multiple contracts. You did it 10 times, so you got $380 or something. Hey, Retire, I appreciate you being here. Okay, yeah, I'll look at some of those. Grateful Trader. I'm just catching up with these things. All right, Grateful Trader. We're going to catch up on this. BDJ. I'm looking for a new fund to review. Recently we've had some pretty good ones, and I thought there was pretty good reactions. You guys liked them. Remember Q Up and Q Down. Then I did SBAR, SBAR, which wasn't a great interview. That's a weird fund from Simplified. And then what was the one I did yesterday? It was a really interesting fund. Anyway, I'm going to do another one tonight, but we can probably, I'm trying to get ideas right now. So if there's anything you want to see reviewed, let me know. All right. BDJ. I've looked at this one before. It's a Japan ETF or something. Oh, okay. Enhanced Equity Dividend Trust. Generally, when it says enhanced, it means they're selling options. It says closed-end fund. Let me look for other hints. 8%, and they have been around a year, so it's snooze fest. Really, probably 8 to 12 is the magic. If there's the practical kind of limit for yield. I mean, without getting into other problems, but like say 8 to 12% is great, and you can retire on 8 to 12% if you have 2 million. 3 million. And a lot of people do anymore because the market's been, it's not as uncommon as you think to be a millionaire, but there's a lot of people that don't. And I think for those people, it's not the best advice, but anyway, or you just can't, you're going to have to think of a plan B. You need to talk to your planner, but I think some of these higher yielding funds used discreetly with, use cautiously could maybe help those people because QILD would be if everyone could retire on QILD, you have a 60-40 portfolio, you got $2 million, do a 60-40 portfolio. You got $2 million, do a, 59-48 portfolio and put 2% in a high yield fund, live happy ever after the rest of your life. Or I'm saying if you don't have 2 million, if you only have 500,000, you have to do that. If you have 2 million or something, you can put it in something super safe. Put it in JetQ. You know, it wouldn't be 2%. You'd have to be like 5%. But you have $2 million, put 3 or 4 or 5% something in something hardcore. Put everything else in stocks and bonds, and have a happy life. And you don't have to worry about erosion, because those ones that only pay 8 to 12, they don't erode. It's not they don't erode. Erosion's a misnomer. It's that they all erode. Like I've said before, they all deplete. Eroding's a misnomer, but every single one of them depletes, just to differing degrees. Even SCHD depletes. All right, so BDJ, what was the other one you wanted me to look at? I've already forgotten it. BDJ and PSQ. Now, PSQ I have seen before. I always try to think of these before I punch it in. PSQ, I know what this is. I just looked it up the other day. PSQ. I don't know. Oh, yeah, I did know that. I've seen this the other day. So it's a ProShares, and it's the NASDAQ, but it's leveraged short, I think, or not leveraged. And this is interesting here. Funds that have leverage do actually have erosion. It's just not the high yield funds don't do that. They have depletion. This fund, but so basically inverse funds have erosion because they all are leveraged. Well, this is inverse, but it's not leveraged. I have a feeling though that I don't know. Anyway, it's an inverse fund. It's. I mean, look at this. I mean, it went from 36 to 47 in the last pullback. I mean, but it bleeds all the time because it's inverse. I don't know if you could use this to hedge or not, but anyway, it's another thing to look at. I mean, but I like that it's not leveraged, because if you're looking for an unleveraged solution, I like that. Good one, Grateful Trader. I appreciate that. XYLD. If you never heard that, XYLD is from Global X. It's the granddaddy. It's the boring XYLD and JEPQ and JEPI, multiple billion-dollar covered call funds, and they were the first big successful covered call funds that were ETFs. They've been putting covered call funds in mutual funds for a year and other stuff, but in the ETF, it really opened up in like 2012, 2013. Global X actually pioneered the industry, and the guy I was talking about, that the manager of Q Up and Q Down, that's where he got his start. That's how he learned the business, as he was a Global X. Well, Global X, they don't have the most exciting funds, I mean, in my opinion, because their fund is the base model. And, you know, there's been all kinds of, but it's the base model. So, but the thing about these guys is they are transparent as all get out. They have the best website for learning about, not so much learning covered calls, but learning covered call strategies. Because look at that, when I'm trying to you know me, I'm obsessed with back testing. Well, wonder if we owned this during, 2016 and we had I'm obsessed with scenarios. You can get in this, what they have is they've provided all their returns back to 2013. They show you how much XYLD, which is a S&P covered call fund, and QYLD and RYLD, but they show you how much each of those funds made, and they manage distribution. So they just pay you a percent. They pay you a percent. Global X pays you a percent or half of what they make, whichever's lower. There's times when they don't quite make 2%. They only make a 1.5, not very often, and they'll lower their dividend. But if it's at all possible, if they at least make 2%, they'll pay you 1%. That's the way it works. So let me show you this. Let me show you some more stuff here. But yeah, these are the granddaddies, and a lot of people, when I first got into this business, people were giving these as examples of bad funds that eroded, that had erosion and stuff. And it's not true. They just aren't the most exciting funds. Oh gosh darn it. Maybe it's under documents, how to invest, about us, insights, articles. They just have the best section on covered calls. They have, like, it's not just one thing. And it's not just me that said this. I think it was actually some other influencer was always talking about Global X's site also. It just, they're the best in transparency. They're the best in transparency. They used to have a whole section called, like, I don't know, maybe it's not on their website anymore. But anyway, but that's what QYLD is. QYLD is just a basic covered call fund. They own stocks and they sell a monthly call and they roll it. It's just super boring. They make 12%. Super boring. Let's look at this. Let me show it to another way. So I'm going to try to show you why people hated QYLD when I first got in this business. I'd never heard of it, but I've never heard a lot of this stuff. And people were just nonstop talking about QYLD. So I looked it up and I was like, oh, that's cool. So QYLD, now we're going to look at it through, like I say, it goes back a long time. Yeah, there we go. Let's go back to 2014. So, I mean, we're going to look at a couple of things. First of all, yeah, all people could get over because they look at both of them and they thought if you're buying QYLD, you're getting ripped off. You know, it's because they didn't understand part of your return was coming through dividends. Now, in this case, even with the dividends included, you're just doing 4.5%. But that's fine. There's wealthy people. That's all. They don't care. There just wasn't an option out there before. Now there's better ones out there. But 4.5%, barely keeping up with inflation. But let's look at it this way. Let's compare QYLD to the one that was the improvement. The first improvement was like JEPQ. It came around in like 2021 or something. But let's compare QYLD to JEPQ. That did basically the same thing, but it had better results. They took some of their strategy. And then that's what every fund's doing now. QYLD is where it started out, and then JEPQ and JEPI. But you can see JEPQ had a lot better total return, about twice the total return. So maybe QYLD does suck. I don't know. I mean, it does. Not only does it have it has low total return. I mean, but here's the real knock on it. When I got in the business, people cannot get over, and I couldn't. I mean, this is a true criticism. Or let's look at it from 2021 to 2024. The problem with QYLD is they sell at the money options. They don't sell out of the money options. So they literally get no upside. They're doing it all for the income and the buffer. So what that tells us, it tells us they actually do decent in down markets, but comparatively, but it just depends on what you prioritize. It just depends on what you prioritize. Okay, so this is not what I wanted to show. I want to show it 2021 through 2024, right? Oh, yeah. Well, okay. Maybe like this. I'm trying to show a really poor performance in the pullback. But that in a lot of funds had a really poor performance. And you could see QYLD lagged way behind, and it took forever. Let me show it to you this way. Let's look at Seeking Alpha. Okay, Lutnick's talking. We're going to roll out over dozens of trade deals over the next couple of months. Well, that's great. I mean, Pinterest is out. That's up 3 points. That Pinterest made my wheel potential. And they had earnings this week. That would have been a good time to get in on some. Plus, it's up. Yeah, DraftKings lost 7 cents, first 8 cents. They're showing DraftKings. I'm sorry about this, but I love talking about QYLD. I mean, QYLD is the basis. That QYLD started this whole industry, and then they've just been improving on them. QYLD, do that one, and then I'm going to put JEPQ in also. Okay. All I was trying to show is on total return. All I was trying to show is on total return, it took like 2 years to get back above even. For some, I mean, it just, because it gets no freaking upside. Not a lick of it. In fact, if I get Kevin Kelly on the show, I don't want to think I'm a jerk, but I want to ask him why they did it that way. I think I know what he'll say, but probably say they're trying to create a larger buffer. And, it's all about the income, right? Who's going to tell me the same things that I tell you guys? Out of the money's the bomb. All right. So let's see how long. Gosh darn it. This is the worst demonstration. All right. QYLD. It was underwater for like more than a year. And the other covered call funds got back above. Literally, you could see it lagging. You can even see it here. As it just gets no upside. They leave all the upside on the table. Yeah, let's go eat dinner with some of these fund managers. Heck yeah. I ate dinner with a couple of them in New York. But anyway, I don't know if that's going to happen again this year. I haven't been invited yet, and my station's not doing. Oh, here's something else that's not going great. I emailed Jay on Monday, first thing Monday morning. I have not got an email back yet. What is it, Wednesday or is it Thursday? It's Thursday. It wasn't Monday morning. It was first thing Tuesday morning, though. So I expected. No, actually, it wasn't. It was first thing yesterday morning. But I expected I would get a response by the end of the day. Or definitely by today, and I've checked yet, and I haven't. So maybe by the end of the week. I mean, I don't think he's blowing me off. I just think he's busy. But I don't know. He's probably out there talking to influencers that have more followers. Like I always say, there may be people with more followers than me, like Retire, but I guarantee you, there is not a group of people with a smarter bunch of followers than I have. My followers, all 3,600 of them, know exactly what's going on, and I enjoy all my interactions with you guys. I appreciate you guys. All right. Well, if there's nothing else you want to talk about, we could just get out of here. But thank you so much for being here, all 11 of you guys. I really appreciate it. I'm trying to think. I know I have something else. What am I going to review tonight? I need to do another fund review. Let's talk about that real quick. What do you think about? Do you want to hear about this fund? I was thinking about this one. I'm going to name some that even Ethan doesn't know. Have you heard about JoJo? You want to hear about JoJo? What about JoJo and Roro? You heard about Roro? It's not Rose Sparks. It has nothing to do with Rose Sparks. JoJo and Roro. Yeah, those might be good ones. Tactical rotation. We could talk about some market timing, stuff like that. Maybe BTOP. Anyway, I'll figure out what it is. If you have any suggestions, put them in Discord. And we actually do have a place in Discord where people make suggestions. I'll also go look at those old suggestions and see what's up. Yes, you're employee number one. But the problem is right now it's a nonprofit. That's even a nonprofit for me. It's not like I'm making money and just getting you to volunteer for it. It's nonprofit for all of us right now. That's kind of why I'm thinking about starting. Anyway, I was kind of thinking about starting an Austin station and just doing it at night because I really think the Austin station would have a chance of making a lot more money than this one. And keeping doing this one like I am. I mean, we'll have Discord and have it in a live stream in the morning and do earnings trades. I'm not, but maybe try to do something on YouTube, but then maybe for commercial success. This one I never intended to be commercially successful. I got on here pretty much to argue with the people and Retire on Dividends comment stream because he was always getting the bad comments or not really to argue, but to teach people how options work. I thought this would be a great opportunity, but there's not a big market in it. There's only one Retire on Dividends. There's not enough for 28 influencers talking about these high yield funds. So Retire's the go. And there's a couple of other good ones too. I like Dividend Stockpile. I like old Heck, I like a lot of them. I love Panda. I really like SoCal Steve. SoCal Steve does a pretty good job. Anyway, there's a lot of them out there. So anyway, all right, guys. Well, I appreciate. Oh, PSQ the yields also. It's weird that PSQ yields. Let me look at that because it's not leveraged. Have you guys ever heard of leverage? There's a leveraged bond fund, triple leveraged bond fund called TYD. Never heard of it. But it yields a bunch. Now that's because of the leverage. Maybe I didn't really think about that. But let me show you TYD first. I was impressed with how much this thing. Direction 7 to 10, Treasury bull. Oh, so it's a leverage bullish. But I want to show you how much it earns. It just seemed like a lot to me. It's triple leverage. Does it mean it would own triple dividend? I can't really think. You know me, I hate bonds. Look, it says dividend 3.3%. What the heck? Well, anyway, I was running this in a back test last night. I guess it does pay. It pays more than SPY or whatever. I mean, SPY pays what, 1.6 or something. It pays about double of a lot of other things. Okay, and then what was the other one that did it? Was it SP something? I already forgot it. SPZ or something. PSQ, yeah. Yeah, but now that I kind of got the hang of this YouTube, I'm thinking about trying to start a station and actually doing it for profit. Maybe even trying to raise some money and invest in it. And I don't know, but I'm really excited about that because there's something I'm as passionate about about options. You know, there's lots of stuff about dogs, guitars. Anyway, but it's Austin too. So this one yielded, 6.4. Well, that's not bad. I mean, that is really not, that makes it attractive. That makes it attractive because then not like it wasn't before, but let's look at this really quick here. Glad you're still here, Ethan. Everyone else has probably left, and that's fine. And let's look at this really quick. Let's do a portfolio with but I was thinking, so that one's a hedge. Let's do one let's do that. Let's just see if that could help us hedge anything or not. Coinbase CFO is talking. Well, the call hasn't happened yet. The call's at 4, like we talked about. So ARM is down 7 points, which isn't that much for that expensive a stock. Misty's up 80 cents right now. Rigetti Computers, man, $10. That's a goodwill stock, or just go buy that. I mean, that's a potential growth stock, I've heard. SoundHound AI is up a penny. Yeah, but if you could pay 6% on all I was thinking, let's do a 60-40, but throw that in and just see if it could help. See if it could help a 60. Let's see here. So, 60 SPY. And let's see, 0, 0. All right. 60 SPY and then PSQ. We'll just go 60-40 and we'll see if this can help hedge. You probably wouldn't get 6. I mean, you wouldn't do it like that. Forget about bonds for now. I just want to see if this. Well, evidently not. Let's look at this. Let's do another one. Just a normal. All right. We'll compare 1 to 2. There's 1 down 20%. It's been a tough year for stocks. I mean, and 2 is down 11%. Yeah. So no, it didn't help us. Wasn't it inverse? Yeah, it was inverse. But let's go look at the yield. That's what I want to look at. But look at this portfolio income. We'll just look at the middle one because it's a full year. $151,000 income. This is on $1 million. So is that right? That's got to be wrong. Maybe this is on 2 million. Celsius founder gets 12 years. What did he do? Is that CELH? Is that one, or is that a different one? Celsius founder. Well, the good news for him is if he donated to the Trump campaign, he's probably going to get an annulment or whatever. He's going to catch a break. Just like it was the guy, the electric car guy that got a break. Oh, it's the guy that rolled that truck downhill. He ripped off millions and billions from people. Remember, he did a demo and he raised money, and it was a big electric truck, and it turned out it was rolling. It was never, oh my gosh, or something like that. Holy cow, that's only on 500,000. What's going on with that fund? There's something wrong with that fund, or there's something wrong with this program. Let's do 500,000. Don't take any money out. It was also trying to withdraw money and stuff. So 60-40, SPY, and then hedge it with shorts. I just want to see if that can help at all. All right, 5.5% return. That's fine, right? The other fund's 13%, so it didn't help. But yeah, this is more what I was trying to show. It did cut your drawdown in half, though, because you're, betting against yourself. Your drawdown was 2.5 instead of 5. But back to what I want to look at. Let's look at the income. Could this help out an income investor? I mean, what in the heck? Okay, Ethan, you're in charge of figure out what's going on with this. I got to do other stuff. If you want to. Anyway, tell me what's going on with this and let me know, because I have no idea. That's a good eye, Ethan, our grateful trader. I appreciate it. Hey, Dan, thank you for being here. I tell you what, I haven't done my bit yet on the mainstream media. You're just in time. I don't have any good mainstream media rants today. Okay, hi, Mark. What's your opinion of using these funds with leverage to cash flows? I would not do it for myself. But I've seen influencers on YouTube that are doing it. And to the extent you can trust them, they appear to be doing a decent job. I mean, I think it's something that a person could think about, but I'm not going to touch that one with the 10-foot pole here. And it's not like, I mean, I'll just be honest about it. If I was 30 instead of 60, I would be all over that. I'd be the one out there with the home equity line of credit, and I would be doing it different than they do it. But yeah, I would. If I could have got my ex to agree with it, I'd done it in a second. So I mean, my opinion is, it's interesting because you can say, and the thing that makes it interesting is, I say this all the time: there's no commission. You guys realize I changed all my portfolio around the other day. That Tasty Trade charges 1 cent. So, I mean, it was stupid that I bought XOMO. It was dumb, but it cost me 1 cent with commissions free, you could do a lot of crazy stuff. It doesn't mean you're going to make money, but it means that you aren't going to bleed as much of it away. So yeah, I do think that there's probably some value in doing that. If it was me, I would, I had my home was worth a couple $100,000. I might have taken a loan out for 50,000, tried to get a little triple QI, and what I would have done is I would have bought puts to hedge the downside out. I just hate how, that So I would have taken half the income on $50,000. You get 5% a week, about right. Well, it's 5 times 12. So yeah, about 25. So on 50,000, you make 2,500 a week. I would have taken that 2,500 a week, and I'd put 1,000 into an at the money put option every Monday and just held it till Friday or until I could sell it for a profit and then rolled it, whatever. But then if I had a year like I've had recently, even though my high yield investment would have done great, it's still producing income. So I'm still paying my HELOC, but the way I do it, people wouldn't like it as much because they're like, well, you only make half as much. Yeah, you only make half as much, but you cut out all the downside risk. In fact, you even make it where you can outperform funds, because if you have a year that goes down a bunch, in theory, but yeah, that's what I do. So, but that's what I would do. But I mean, I wouldn't touch it now. But what I'm trying to say is there's plenty of influencers out there. I've seen several influencers out there that seem to be doing it and seem to be fairly successful. So that hopefully they can, maybe if you're really serious about it, maybe they can help you out with it. I just can't. My only advice would be to hedge it with put options. I told you my only advice. That would cut the downside erosion out. And these funds don't really erode, but it would cut the downside depletion out. You would still have the problem of they don't go up very fast or much at all. And, so it's not perfect, but I would at least keep myself from getting a margin call from the market dropping 20%. In fact, if the market dropped 20% because of the leverage on that put option, I would probably be ahead for the year. So now, and I haven't seen anyone doing it like the way I'm talking about. But I'm saying there's people out there that are doing it in other methods, but I haven't seen anyone that's talking about buying the at the money put. And I've tested that before also, as you might imagine, test out pretty well too. Guys, I appreciate y'all for being here. Dan, thank you for being here. Sorry I didn't have any good rants today, but I'm going to make a video tonight for you guys to watch. So, I'll post it as soon as I get it done, and you guys can let me know what you think of it. All right, guys. I appreciate you guys. You have a great – well, I'll talk about JoJo and Roro a little bit. All right. But JoJo is junk on, junk off. It's a timing system. They use moving averages. Somehow they use the ratio of lumber to bonds. And whenever bonds are outperforming lumber, they're in their safety. They have a safety. They have no junk in their portfolio. But then they buy junk bonds whenever the market's going up. It's called junk on, junk off. The RORO is called risk on, risk off. And they do something similar. They use the lumber they use some type of ratio that shows you what the economy is doing. And they do one thing when this is going and another thing when the other thing's going on. So I'll put all that in the review, and then we can talk about it when the review happens too. Yeah, it was NEO, or I think that the guy that I was talking about, that CEO, I think it was NEO. They had big trucks, and somehow they were doing a demo, and they were trying to make people think it was really working, but it was like downhill, it's not NEO. Okay. Well, anyway, I could look it up. I'm just not that interested in it. But guys, I really do appreciate y'all for being here. I'll be back in the morning. If there's anything we forgot to talk about or missed, just hit me up in Discord. All right, guys. Well, now the one you're talking about, I think, starts with K. Oh yeah, it starts with K. They were going to do the big freaking electric trucks. I mean, Tesla's going to do those too. Anyway, I'll figure out what it is and we'll talk about it in the morning. All right, guys, you take care.